So in this chapter, we'll be discussing about wealth tax. Wealth tax is right now not there. It used to be levied earlier. But for information, it is important that you understand it, okay? So the intent of this tax is to levy tax on assets that do not generate income. So normally how is tax calculated? So you are doing a job and you are getting salary. On that salary, government will be imposing tax. Or if a company, on the income, on the profit, you have to pay tax. So there are some assets that do not generate income. For example, jewelry. So jewelry doesn't, if you keep jewelry at home, it doesn't earn you any income. Real estate. Say for example, real estate. If you have given it as rent, you will get rental income. But say for example, you have not given it rent and you are living in it. It's a huge, very big mansion. So there are these assets which are not generating income, but only people who are very wealthy can purchase them. Okay. So government has stipulated that realty investments such as urban land bigger than 500 square meters, or a second house or property that has not been let out for more than 300 days in a financial year, or a farmhouse within 25 kilometers with the local limits of municipality, they require you to pay wealth tax. It used to be earlier, now it's not there. But these are situations where wealth tax has to be paid. So wealth tax payable was 1% of the net value of the taxable wealth, provided it doesn't exceed 30 lakhs. Okay. So as I said, it is no longer leviable with effect from assessment year 2016-17. Now we need not file any wealth return tax. Wealth tax return that is from 2016-17 assessment year onwards. But while abolishing wealth tax, it was announced that earlier there used to be this wealth tax return. Okay, so in that return there used to be some information that has to be given by the SSC. Now, while this wealth tax was abolished, the information which was required to be furnished is now made part of the standard income tax return. Okay, so individuals with income above a specified limit and filing returns in ITR 3 and ITR 4 have to already furnish information of their assets and liabilities in their annual return of income. Okay, so there will be a statement called statement of assets and liabilities. So now individuals have to furnish the assets and liabilities. So under assets, you have to furnish whatever assets you have. So all this jewelry, gold, real estate, all this have to be furnished. Okay, so this will be relevant for individuals filing their returns of income, having income exceeding 50 lakhs. They have to furnish this information regarding assets and liabilities. So in interview, they might ask you, is wealth tax still levied? No, it's not levied. So how will government get to know the asset details? Now, as part of the standard income tax return, individuals having income exceeding 50 lakhs have to furnish this information regarding assets and liabilities. Okay, that will be in the ITR form, income tax return.